partnership. We understand and care about the unique needs that come with operating a small or medium-sized business by offering flexibility, partnership, and expert advice to support your successful growth. For you, we've created the Jmmb Smart Business Account. The Jmmb Smart Business Account is an interest-bearing checking account for registered businesses with an annual revenue of under $450 million, or US dollar equivalent, which gives you the opportunity to maximize the value of every dollar earned. The benefits? No nuisance fees. Never have to deal with monthly service fees, account dormancy fees, and minimum monthly balance requirements. Easy payments. Enjoy free bill payment and free inter- and intra-bank automated clearinghouse ACH transfers within Jamaica. Interest accumulation. Earn interest and grow your company's money over time. Interest is calculated daily and paid monthly. One free manager's check per month. Check leaves available upon request, or ask about our special pay-as-you-go check feature. Speak to a Jmmb bank representative today to see how the Jmmb Smart Business Account, along with our Small Business Loan Solutions and SME Resource Center, can support you in growing your business. Follow us on Facebook, Twitter, Instagram, and LinkedIn at Jmmb Group, or visit our website, jm.jmmb.com. Jmmb SME Resource Center, a partnership smart business account for SMEs. Being a business owner is a role that changes constantly. At Jmmb Bank, we offer a new type of partnership. We understand and care about the unique needs that come with operating a small or medium-sized business by offering flexibility, partnership, and expert advice to support your successful growth. For you, we've created the Jmmb Smart Business Account. The Jmmb Smart Business Account is an interest-bearing checking account for registered businesses with an annual revenue of under $450 million, or US dollar equivalent, which gives you the opportunity to maximize the value of every dollar earned. The benefits? No nuisance fees. Never have to deal with monthly service fees, account dormancy fees, and minimum monthly balance requirements. Easy payments. Enjoy free bill payment and free inter- and intra-bank automated clearinghouse ACH transfers within Jamaica. Interest accumulation. Earn interest and grow your company's money over time. Interest is calculated daily and paid monthly. One free manager's check per month. Check leaves available upon request, or ask about our special pay-as-you-go check feature. Speak to a Jmmb bank representative today to see how the Jmmb Smart Business Account, along with our Small Business Loan Solutions and SME Resource Center, can support you in growing your business. Follow us on Facebook, Twitter, Instagram, and LinkedIn at Jmmb Group, or visit our website, jm.jmmb.com.
Good afternoon, everyone. Welcome to Jmmb SME Resource Center workshop. Tonight, we're going to be speaking about how to invest as a business owner. I am Tanis, and on behalf of my entire Jmmb team, I really just want to say thank you for choosing to spend your next 2 hours with us. We're guaranteeing you that you're going to be having a very educational night. I'm sure when you leave here tonight, you will be calling our reps to see which investment is best for you. So thank you again. And I just want to point out that we have a very diverse group with us tonight. We have persons all the way from Trinidad, and we have persons here in Jamaica as well. Before we get into the night's activity, though, I really would just like us to start off with a word of prayer. And we're also going to share a section of a very important document here at Jmmb, our vision of love. So to lead us into that, two of my team members, Paula and Shauna, who is going to lead that section. Guys, you can go ahead. Shauna?
Good evening, everyone. This is an extract from our Vision of Love. The Jmmb team is clear that the organization is based on unconditional love and mutual respect. This love is expressed in ongoing day-to-day working relationships and performance. Unconditional love is expressed in every interaction and is the foundation upon which the organization rests. That ends a portion of our vision of love.
Thank you so much, Shauna. Paula, you can go ahead and lead us in prayer.
Good evening, everyone. Let us pray. Lord, we give you thanks for allowing us to be gathered here once again for another session. We ask for your blessing and your guidance on this session, on everyone gathered here tonight. In your precious name we pray, amen.
Thank you, Paula. And just to ensure that we have a very interactive night, we're going to ask if you are comfortable, please to just turn on your mic. If you have any questions, feel free to raise your hand, or you can indicate in our chat window. We will have representatives from our team answering questions, but we really would love if you would voice your questions, because we really want to hear from you and have an interactive night. So we're going to do one more activity before we get into the main course. We are going to ensure that you are familiar with the team and you get to know who you're going to be spending the next 2 hours with. So I'm going to ask Natalia, who is our representative in Trinidad, to go ahead and make the introductions.
Hi, thanks, Denise. Hi, good night, everyone. My name is Natalia Rahamatullah, and I am the Resource Center Officer here in Trinidad and Tobago. Just to introduce you to the rest of the team, like Denise said, we have a very wide, diverse team here tonight. So leading us, we have Miss Shani Duncan Faulkner. She is our Group SME Resource Center lead. She just waved in case you saw. We also have Denise, who you would have heard from earlier. Denise, she is one of our SME Resource Center officers in Jamaica. We also have joining us Mr. Vincent Auld, our Senior SME Resource Center officer. Vincent, you could give everybody a little wave. Thanks. We have Miss Paula Forrest, who is also one of our SME Resource Center officers and who said that lovely prayer for us a little bit earlier. And we also have with us Ms. Shauna Harris, who is our SME administrator. Shauna, give everybody a little wave. Yes, so that's the SME Resource Center team, the SME unit. We also have with us Ms. Nadine Thomas, who you'll get to meet a little bit more later, and you'll hear from her, obviously. And that's it. So feel free to reach out to us in the chat if you have any questions. Feel free to shout out our names so we can answer any questions you have, and we would be happy to answer and help in any way we can. Yeah, so I'm going to turn back over to Denise.
Thank you so much, Natalia. So we are here tonight to discuss how to invest as business owners. But I'm going to ask you, before we get into the topic, I'm going to ask you for less than 5 minutes of your time. We do have persons who are clients with us tonight, and we have persons who are not clients. So for the benefit of the persons who are not existing Jmmb clients, I really just want to introduce you to what Jmmb SME Resource Center is about. We are here to work with our SME. And for us, that means that we're partnering with you through your business life cycle. And in order to do that, we ensure that we know what your business is about. We know what your goals are, we know what your dreams are, and what challenges you are having now. And once we do that by our needs assessment, then we ensure that we point you in the right direction with the appropriate solution. And those solutions, we have solutions here at Jmmb, such as our pension, our banking services, such as loans. We have partners that we work with outside of Jmmb. These are specially selected persons that we have vetted based on their track record to make sure that you are getting exceptional care. So those persons are in marketing, we have accountants, we have business development, and of course we have workshops, the one that you're attending tonight, where we do fabulous business topics geared to address issues that you may be having in your business and guide you in terms of developing your business. So that is it about the Resource Center. If it is that you would love to contact us, we are going to provide our contact information in the chat window. Feel free to reach out to us, send us an email. We are happy and excited to hear from you. But tonight, we are going to be speaking about investments. And this actually also came out of our needs assessments that we have been doing with our clients. We recognize that a lot of our business owners are interested in having an investment portfolio for themselves as well as for the business. And so tonight we're going to be looking at the difference between investing and saving. What are the different vehicles that you can utilize, and what exactly is an investment portfolio? To take us into that tonight, we have one of Jmm's experienced team member, Miss Nadine Thomas, and she works with our personal portfolio management team. She has been with Jmmb over 10 years, but her journey actually started at NCB, and she has worked at other institutions such as the SIJL. But I'm gonna allow her to introduce herself and take us through tonight's activities. So Nadine, I am handing over to you.
Okay, thank you, Tanise, and I'd like to welcome everyone to the SME webinar for tonight. Tanise, you sort of put me on the spot there because I know I sent you a long list of stuff and I was expecting to hear it all, but nonetheless, I want to share, you know, in terms of my background, as Tanise articulated earlier, I've been with Jmmb for over 10 years now. I would have gained experience in other institutions within the financial industry. As she said earlier, I started my journey at NCB, transitioned to NCB Capital Markets, had a short stint at Scotia Investments via their asset management department. And here I am back at Jmmb. So some persons would say somebody like me drink the Jmmb Kool-Aid, and that's perhaps exactly what it is why I'm here again. But I'd like to welcome everyone to tonight's webinar. We're gonna be looking at financial solutions and investment from a business perspective and from an individual perspective. We know that, you know, from time to time, persons get the whole savings and investment concepts mixed up. And so we want to clear any gray area where that is concerned tonight. I want to commend those of us who are online for taking this big step as it relates to starting your own business and being entrepreneurs. And we know that that is a huge step. So many times persons have articulated remorse at having a business idea and not pursuing it. So we know that this is a huge step and we want to commend you for taking that step. In addition to that, you know, I just want to represent the fact tonight that there is not a huge difference between investing from a business perspective versus investing in financial investments. And I came to a little hurdle when I started my presentation because I was saying to myself, what is it can I share with this group tonight that they don't already know? Because they are actually your doing this sort of investment on a day-to-day basis, making decisions, strategizing, you know, putting your portfolios together. And so I thought it important to come from a perspective of just representing some of what we already know that can help us to reposition ourselves as we seek to grow. Okay, so I am gonna share my presentation at this time. Share. All right. Are we in full view?
There's a message blocking the presentation, but we are seeing the presentation, so you could just exit out.
Okay, we're good now?
Yes.
So of course, please feel free to raise your hand if you have questions in relation to anything that is shared. We don't want to wait until the end to pose all the questions and, you know, forget something that we needed clarity on. All right, so in doing my preparation rather, recently I came across a video which I thought would add some value to what it is that we're gonna be discussing tonight. And add some value to some of the decisions we make as entrepreneurs. And this is summarized in this slide, the 10 rules for success. And this was shared by Robert Kiyosaki. And what he shared was that, one, for any person to be successful, it is always important that we remember that we're always students. And what that means is that we're always seeking to gain knowledge. We're always seeking to grow. And as we look at financial investment, we're seeking to become more financially educated. How do we do this? It doesn't necessarily mean that we're going back to school, we're taking a long course, but by simply reading information, by simply getting ourselves familiar with the right set of persons, reading different articles and feeding our brains with information about the economy, for instance, about the industry that we're in, which stimulates decision making. So being a student, gaining knowledge has to be a consistent part of who we are if we're seeking after success. Another important point that he made was that we have to have an entrepreneurial mindset. And that really resonated with me. Why? Because he shared that having an entrepreneurial mindset means that we are unstoppable. And we're gonna see the possibility in every situation. So we're going through this COVID period right now, and a lot of persons would look at what we call the external economy and make decisions within their internal space, within their internal economy. What the entrepreneurial mindset posits is that you have control over your internal economy. And that captures how you relate to what is happening outside of your mindset, outside of your space, and in the broader global economy. So it doesn't mean that because we're faced with a crisis, for instance, we're gonna give up. And this takes me back to the whole concept of the book. And some of us may have come across this. Who Moved My Cheese? Is anyone familiar with that book? You could just raise your hand in the chat. Who removed my cheese? And what that really articulates is, you know, two mice, they were so used to being provided with their cheese, and all of a sudden, the cheese is not appearing anymore. Now, there was one who said, we're gonna wait until things change, until we are getting back our cheese. But there was the other one who was a little bit more proactive and had a different mindset. And what he thought about is that, you know, or paradigm has shifted, things have changed. And so I need to go and source my cheese. And as a result, he was provided with even more. And so I'm saying that to say, as we go through this period, we can either fold our arms and wait for the economy to go back to where it was, or we can decide to take a paradigm shift, reposition ourselves, reposition our mindset in respect of seeking after success and being successful in our respective businesses. Another point he shared was that we have to learn how to sell. And this, I'm sure, resonates with all of us, whether it is that we are team members, whether it is that we are entrepreneurs, we must learn to sell. And we do this on a day-to-day basis, whether it is that you're selling your product or you're selling your brand, which is yourself. This is something I tend to share with my team members too. You ought to be able to sell your brand because you're a brand. So selling is very, very important in being successful as an entrepreneur. We also need to be a team player. We need to strive to do better than we did before. So yes, your business made 20 million last year, for instance. Your target this year is not to make 20 million. You're seeking to grow beyond that. So it is important to set targets, higher targets, periodically to facilitate that growth and to help you to push and to stretch yourself so that you can achieve more. He also pointed out that it is important to seek mentors. We don't know everything. And there are those who have gone before us, who have gained the experience. And so we don't have to experience everything for ourselves, you know. We can learn from other person's experience as we seek to grow. So this is also very important. Seek mentors as you seek after success. Another important point, do your research. You're going into a new industry, you're seeking to invest in a new product. It is important that you know and you understand to a certain level what it is that you're getting yourself into. Agreed? It is also important to become a leader. And there's a difference between a leader and a manager, which is, you know, warrants another webinar, another workshop. But being a leader is important. And he touched on having the Midas touch. Now, this one was a little bit new for me, and I had to go back and listen to it all over again, the Midas touch. And he said what the Midas touch is where I'm raising my hand. He said the thumb represents strength of character as an entrepreneur. The index finger represents focus. And we can see how it relates. Focus. And thirdly, he said the middle finger represents what you stand for. The ring finger, as we all know, it represents relationships. And this little man here is a very interesting one. What it represents is making a difference, separating yourself and setting yourself apart, doing what others are not doing. So you make your mark. And I found that to be quite interesting. Are you seeing my slide?
Yes, could you put it on full screen now? So if you can.
Are you seeing the 10 rules for success?
Yes, we are.
Okay, all right, good. I don't know why it's not changing on my other screen. Slideshow, hold on.
So Nadine, it sounds like these 10 rules that you spoke about, these are really also very good rules for being an entrepreneur.
Exactly. And that's what he articulated. You can look at it from two perspectives, as we shared earlier. You can look at it from an entrepreneurial perspective, or it can be simply applicable to who we are as individuals as we strive for success in our daily lives. So one of the things we'll realize as we go through the presentation is that there are a lot of commonalities between your pursuits as an entrepreneur in a small business and your individual pursuits. Okay, thanks for that question, Denise. So he also said, and the final one is, do not quit. Do not quit as an entrepreneur. All right, so one of the things that stood out for me, or one of the points, one of the rules that stood out for me is number 3, which says, learn how to sell. And we said earlier that for any entrepreneur in whatever business you're operating in, it is important that you have some form of selling skills. It's applicable in your business, it's applicable in your personal life as well. And so we're gonna take a little break at this time, and I am gonna give someone a 60-second period in which to sell us their product.
Thank you, Nadine. Good evening, everyone. I am so excited. Here goes my 60 seconds. Malgully Variety and Electronics Store. We're a variety store. We offer a wide range of products, electronics, and appliances. Not only do we offer those, they are delivered to you with professionalism, expertise, world-class customer service, and like our logo says, everything that you want, we have it in store and more. You can find us in Malgully, Manchester. Malgully Variety Store, we're waiting to serve you.
Awesome, awesome pitch. Good job, Kenisha Dwyer Powell. Good job. I think we owe you a little token. I'm sure the Resource Center will arrange it and ensure that you have it before the week is out. Guys, remember this is interactive. Would you be interested in being a client of Kenisha Dwyer Powell, having heard that pitch? You can raise your hand. Judy, I see your hand raised. Was it from earlier or you're raising it now?
It was earlier, but I was late. Kenisha beat me out. But good afternoon, everyone. I would buy from her, not so much because of what she said, but I got a very good feeling from her, a feeling of honesty and just positivity, and I would buy from her based on that.
Awesome, awesome. So that speaks to character.
Yes.
In respect to the Meadows approach that we spoke to earlier. Very good, very good, Judy and Kenisha. Thank you so much. Good job. All right, so we will continue. Our next slide speaks about the entrepreneur's focus. Now, I'm sure you'll all agree with me that the main focus of any entrepreneur, the main focus of any small business is to make money. Agreed? That is the primary focus, to make money. And I'll share an experience I had with you when I was a child growing up in about grade 3. I saw this need and I said, boy, you know what? I'm gonna buy sweets from this vendor and then sell it back to students in my class, which I did. I had this little jar and I bought the sweets and I went back to class during recess. I would sell them to the students. And I remember when I went home the evening and I told my mom what I did, she asked the question, so how much did you make? And I said, I didn't make any money. I just sell it back for the price I bought it for. And she said, then why you sell it? And I said, because I saw that kids needed sweets. You know, instead of going out to the front to buy it, I provided it. And so I realized that I missed one key important ingredient. Yes, I identified a need, and I provided for that need, but I wasn't doing it at any level of profit making, right? So I learned that very early in my years. So the point is, as entrepreneurs, we are not merely in this thing just to provide a service. I mean, we're not the government providing a public good. We're in the business to make money. This is where we devote our resources to, and so our intention is to reap the benefits of our labor by making money, hitting the bottom line, making a profit. And some of the areas that can facilitate us making money is by reducing our costs and fees that are associated with the business, avoiding taxes. And no, we're not saying that Resource Center has articulated this, and I share this. There's a difference between tax avoidance and tax evasion. Tax avoidance is where we take actions to lessen our tax liability and increase our after-tax income. Whereas tax evasion now is where we get ourselves into trouble with the government when we fail to pay over our taxes or we underpay our taxes. Everybody on track?
Mm-hmm. So some of our investment vehicles is a good medium to reduce your taxes, such as the guilty unit trust.
Certainly. So Tanis, you're preempting my presentation. So as soon as we start to look at some of those solutions that Tanis mentioned, we will be able to see that some of those portfolio-based solutions help us in avoiding, reducing our tax expenses. In addition to that, we want to find opportunities that create diversification in our portfolios. We want cheaper financing, agreed. As SMEs, we want to be able to borrow. We want to be able to raise capital on a cheaper level. So these are just some of the areas. I know there are varied amounts, a varied number of areas of focus that will help us to make money, but these are just some of the few areas that we want to highlight as SMEs. And as we talk about reducing costs and reducing fees, I note earlier that we shared some videos in terms of some of the offerings that the SME Resource Center provides. And one of those that was shared was our Jmmb Smart Biz SME account. And this provides free ACH transfers to other institutional clients. I mean, when I look at this, everything here says free. I was amazed when I was first introduced to this product. Free ACH transfers to other institutions, free manager's check for each month, free bill payment, free in-branch cash deposit and withdrawal or checkup for checks up to 1 million, free monthly checking account fees, and free monthly service charge. Everything free, free, free. So that indicates that this solution provides some areas of savings for your business. All right. So our next slide will have us reflect upon how resilient is our business. And when we talk about resilience, we're talking about the ability to recover quickly from difficulties. We spoke about the COVID period. This would have been a surprise for a lot of small businesses, and we acknowledge that some businesses have been significantly impacted due to COVID, whilst we have those who have demonstrated their resilience. So resilience, as defined, is the ability to recover quickly from difficulties. Recently, we had a webinar in our branch manager's team, and the presenter introduced us to this term called gumption. And she said, you know, gumption is is some form of substance, and it will help us to be even more resilient. So our businesses during this period, and as we position ourselves for growth, as we position ourselves to be able to transition into a position where we can engage in investing, we want to ensure that the business has gumption and it has resilience. And some of these factors are: one, ensuring that your business has 3 to 6 months emergency funds. 2, ensure that you have a 3 to 5 year contingency plan. Ensure that you have a business continuity plan. I mean, we know that oftentimes you are the backbone of your business, and if something goes wrong, then with you, for instance, then it impacts the business. So we want to ensure that we have some form of continuity plan so that the business can continue. We want to ensure that we have a diversified income stream, and we're going to talk more about diversification as we continue in our workshop. We also want to ensure that we have a diversified strategy to reach and to serve our clients. And we also ought to ensure social media presence and purchase our goods online. And I note that the SME Resource Center hosted a webinar recently, which positioned, or help you rather to position yourself in the digital space, especially now seeing that so many things are digital. I mean, this, for instance, usually will be hosted a face-to-face workshop. I mean, with COVID, we've pivoted ourselves and most things are now being done online. So we have the questionnaire here. I'm gonna ask you to just give yourself 50 points if it is that you have these things in place. At the end of the presentation, we will revisit. And I know our SME team is standing by to provide support in the areas where it is needed.
Nadine, sorry to cut you. We actually have a question in the chat. One of our participants would love to know if you could just give an example of what it means to have a diversified strategy to reach and serve your clients.
All right, awesome. So having a diversified strategy, when we talk about diversification, we talk about multiple options, right? So it's not no single or no one defined way that we're gonna be reaching our clients. So we speak specifically, and we can use the whole COVID period as an example. And I'll use another example that I came across recently. We had a situation where this manufacturer was told that he cannot, he's a producer of bulk wines, and he wanted to export, for instance, in barrels. And he was told that he's unable, based on the regulations and the restrictions by his government, he cannot export barrels. And remember, I'm saying this is bulk production, and that would have been the most convenient way. So in terms of diversifying and outside of thinking that this one size fits all, he was able to recalibrate and to say, okay, fine, instead of supplying by in bulk in barrels, I'm going to look at repackaging in bottles. So that's a perfect example in terms of creating different streams. Okay, fine, I'm not able to serve every market in this format, but there are other ways that I can still get my product to my clients and still satisfy them. In addition to that, we would have seen it even in our local markets. A lot of companies before COVID were apprehensive as it relates to delivery service. right? So that's a prime example. With COVID, we have seen where persons have had to pivot their strategy in reaching their clients and getting their products to clients. So you find, there are so many businesses who are now offering delivery service, as opposed to waiting for the clients to come to you as they normally do. We are able to create different solutions, which now adds to some level of diversity in the way in which we are able to get our products to our clients and to reach our clients.
Thanks, Nadine. And I'm sure our entrepreneurs on the call, if they haven't thought about it before, they're definitely thinking about it now.
Certainly. Okay. All right. So these are very important points, as we mentioned, for any business. It's important that we are resilient. It is important that we're able to withstand any unforeseen circumstances, or we're able to manage during any form of emergency. In addition to that, these factors are also crucial when we begin to think about investing, because you're here to make money from the business, as we pointed out. You're here to grow organically from the operations of the business. And as we know it, real investment, real business generally tends to offer higher return than any financial instruments, correct? So we want to ensure that our business is operating efficiently and we're able to maximize and to grow our business organically. And then we can look at investing. So I thought it prudent to make a distinction between investing and saving. So we said earlier that there's generally this misconception about what is savings versus what is investing. And so we want to make that distinction tonight. When we begin to talk about savings, we're more looking at short-term investment solutions. Also, as it relates to savings generate a lower interest rate. Savings are generally low-risk instruments, and it offers greater levels of liquidity. So we're talking about our savings account, we're talking about our current account, and we talk about liquidity. Liquidity means that you have easy access to cash, and the instrument is easily converted to cash. So you can walk into the bank at any time. You can access your funds via MoneyLine from your SmartBiz account, which is a liquid type of account. And as you can agree, it's a low risk instrument, and it also offers a low interest return. When we begin to talk about investments now and investing, we're looking at a longer term. We're looking at higher interest rate, but also that comes with higher risk. And we find that when we start to invest, the products and the solutions are generally less liquid. So you might not be able to walk into the institution today and get cash. It may take a few days because those instruments are not liquid. It doesn't easily convert to cash. Are we clear?
And just to add, so most persons would know of where we have Jmmb Bank and we have Jmmb Investment. So your savings account would more than likely be the account that you would have with Jmmb Bank. And then when you are ready to go into the more long-term products, then you would be with Jmmb Investment. Just adding, so persons can know that we do have two different entities as well.
Right, certainly. Thank you for that, Denise. All right, so we are clear. So things to consider. These are some important things to consider from a personal point of view before investing. I mean, we talk about the business, what the business needs to have, or the business needs to be resilient before we can look at investing. And from a personal standpoint now, these are some of the factors that we need to ensure that are in place before we look towards investing. Preparing a budget. This is a very big one. And I know it's even applicable to us as individuals. It's important to prepare your budget just to ensure that you have a clear indication of what your income is. You have a clear indication of what your expenses are. Ideally, you want your income and your expenses to balance, but for the purpose of savings, for the purpose of investing, you want your expenses to be lower than your income so that you have that buffer, correct? From a business perspective, of course, we also need to look at our income and our expenditure. I know whenever we as entrepreneurs, the resource center, we're going to ask for financials, right? To do a full assessment of the business to see what the needs are of the business. One of those important documentation is your income and expenditure report, correct? We also want to ensure that from a business perspective that we're looking at what our assets are and what our liabilities are. And we're trying to create some balance there in order to ensure efficiency, ensure that the business is operating efficiently, and to ensure that we don't run into cash flow problems. We want to ensure that we're not funding liabilities, short-term liabilities with long-term assets, or else we're going to have cash flow issues, right? So all of those factors are important, and preparing your budget from an individual perspective is important. This is a big ticket item, an emergency fund. I spoke about it for the business as well. We said that you need to have 6 to 12 months of income, of expenditure reserve, just in case you have any form of emergency. And again, for our participants, emergency, as the name is suggests, is not something that you can see, but it can just happen at any point in time. COVID, for example, it can be a natural disaster. So we want to ensure that the business is resilient and the business can continue. So we want to ensure that we have that cash flow in place. As it is said, cash is king. So we want to ensure that we have our emergency funds in place. And just a little caveat here, never invest your emergency funds, because you want to ensure that it is easily accessible. So you're going to put it on a current account, you're going to put it on a low risk savings account, which facilitates easy access. So if you walk into the institution tomorrow, if you go onto Moneyline, you're able to access your funds. It is for the sole purpose of emergencies. Also very important, we need to be able to manage our debt exposure, right? And we can't have this high credit card bill and we're paying this high return on a monthly basis, paying what, 40-something% returns. We need to be able to restructure our finances to ensure that our expenses, whether it comes in the form of interest expense, are as low as possible to ensure that the business is operating efficiently and we remain focused on our initial goal of making a profit, of making money. And insurance, very important, and this also will form a part of, your emergency funding and preparing for any emergency. Insurance is important. I'm sure the SME Resource Center has articulated the importance of insurance. We have our sister arm, Jmmb Insurance, who also provides insurance solutions for our clients. One thing I want to also add is that we have what is called a family indemnity plan from a personal standpoint, which covers up to, I believe, 6 members of your family, a maximum of $1 million payout in the event that we experience a death in the family. So that is, I think, adds great value to our portfolios from an individual perspective or even a business perspective, because we acknowledge how expensive insurance can be, and the family indemnity plan, I believe it's at a reasonable cost in relation to the coverage that it provides. I know some time ago, a team member of mine, she had taken out the indemnity plan for her family, and within about 6 months, unfortunately, she lost her dad. And that was $1 million coverage right there that could enable the family being able to cover the funeral expenses. Had that not been the case, as a small business owner, where would the money come from to fund the funeral expenses? Out of the business, right? So, and that would of course impact our ability to make a profit. And then those are funds that could have been diverted to purchasing additional raw materials, etc., that now has to be taken out to cover that expense. So insurance, very important. If you don't have the family indemnity plan and you believe that it can add value to your business and to your family, of course, reach out to one of our SME specialists and they will connect you with an insurance advisor to have same setup. And pension, can't underestimate pension. Very important aspect of building out our portfolio. Remember, we're talking about long-term, we're talking about the future. And as entrepreneurs, pension provides tax benefits, and it ensures at that point when you decide to hang up your spikes, you have a base, you have resource to ensure that you're able to live out your retirement life comfortably.
So I guess you can look at insurance and pension as a type of investment as well, because you'd be investing in the long term in the event that anything comes up, then the money is there that you can tap into instead of having to either dip into your business funds or your personal funds to cover those expenses.
Well, not necessarily accessing the pension, Denise, because remember, we can't access pension.
The insurance and the indemnity plan acts as a form of insurance.
Certainly. Any questions? Any other questions? I hope I'm not putting anybody to sleep now. You can go and get a cup of coffee, get some water, and refresh yourself so that we can continue.
No.
All right. Everybody's wide awake. Great. All right. So that's it. Preparing your budget, having your emergency fund in place, managing your debt exposure, and the Resource Center can help you with that. I know they have the capabilities. I know they're ready and they're waiting to just take you through it all to ensure that you position yourself on a path for growth, having your insurance, having your pension in place. All right, so our next slide captures factors now, factors to consider when thinking about investing. And this is where I said that investing in financial assets is not much different from investing in your business. Taking up, making a decision to establish your business, making the decision to become an entrepreneur. The factors are quite similar. So one of the most important things to do before you decide on investing is to have a clear investment objective. I mean, whatever industry you're in, whatever product you decide to offer to the public, whatever product you're selling, you need to have a clear objective as to why it is that you're doing what you're doing. It is also important to set investment time horizons now for for entrepreneurs, of course, you're establishing the business for it to continue. You want it to be a going concern, right? So you have a long-term objective, agreed, towards investing. And hence the reason why you put so much effort into the business, because you're not investing in the business to close it down in 3 years' time. You're looking at growing the business. And for many of us, we talk about creating generational wealth. You want to pass on your business. You want to make a mark. You want to pass off your business to your beneficiaries, to your children. And so you groom them so that they are, they have the capabilities to take over when it is that you decide that, as I said earlier, you want to hang up your spikes. I'll use that term, guys. I didn't say it earlier because I'm an avid track and field person. Earlier, I was preparing and I got so distracted because champs is going on and I get so engaged in what is happening on the track. Right, so let's refocus now. So identifying your risk tolerance. This one is very important. Identifying your risk tolerance. Now, there are different levels of our descriptions of risk. Right, I see the question being posed, do you know what is your risk tolerance? And so we have different categories. We have those who are considered to be conservatives, those who are considered to be moderate investors, and then you have the aggressive people. And we'll talk more about that, very aggressive people who really just want to buy investments or invest in solutions that generate this high level of return, but it also has this high level of risk. Those are the aggressive persons. All right, so we have the conservatives, we have the moderate investors, and we have the aggressive investors. Now, by speaking with a financial advisor, we have that as our last point, to speak with a financial advisor. If you do not know your tolerance for risk, they are able to help you to determine what your risk tolerance is. So I'm seeing the response here. It said, do you know your risk tolerance? 69% of persons answered yes, and we have a 31% that answered no. So Tanise and Natalia, we want to reach out to those persons to help them to understand what their risk tolerance is, because it is also gonna be important for them in making decisions in their business, right? Because you're going, Tanise?
No, I'm saying I totally agree with you. So we'll definitely reach out. So
right. So you need to know what your risk tolerance is. And then as we go on further, you will see why, because you need to know the solutions that are suited for your level of risk or your risk tolerance. It is also important to establish a disciplined approach to investing. We spoke about it earlier. You're not going to give up. You know what your objectives are. You're working towards achieving these objectives, and you're not going to give up when the market turns or something doesn't go as projected. You're gonna reposition yourself. You're gonna demonstrate your level of resilience. You may have to change up a few things within in terms of how you execute, in terms of how you reach your clients, but it doesn't mean that you're gonna fold hands like the mouse we spoke about and expect the market will change to suit you. You are gonna make the changes that will facilitate the growth of your business. So it's important to establish that discipline, and you're gonna stick to your focus in spite of the changes that are happening around you. So we have 75% of persons who do not have a financial advisor. So Tanise and Natalia, we have a lot of work to do. And we came across this term earlier, diversify. Diversify your investment, diversify your business. And what this entails from a business perspective, you're a bee producer. It doesn't mean that you're gonna be selling honey only. There are other derivatives that you can produce as opposed to just focusing on producing honey only. So you want to diversify your offerings so that if things happen outside of your control that you do not project, your business is not significantly impacted. You know, some of the other solutions that you offer in terms of their performance will offset any negative performance in your primary offering. So that's where diversification comes in, creating that balance so that you're not significantly impacted when things happen outside of your control. And we said this earlier, speak with a financial advisor. Speak with a financial advisor. We talk about gaining knowledge, you know, being a student throughout the process. So you're learning. I mean, we don't know everything. And even as a financial advisor, we don't know everything. We're constantly learning, and we're learning from you as well, right? So we're experts in this field. You are an expert in your business. We don't expect you to know everything about what is happening in the financial industry. So we're available to guide you in that process as it relates to experiencing your financial goals. And one of the, I don't know if we're familiar with the laws of wealth. One of the laws of wealth is using other people's money. Yes? So you're gonna borrow and make money from that. A lot of persons do that. You borrow, you invest it in your business, you grow, you pay back the bank what they're to get, and you take the profit, using other people's money to gain wealth. But another important factor that was mentioned is using other people's brain. And so you find that a lot of, and I'm sure you can allude to it, that when you start out your business and you're looking to employ persons, you want to find experts in different areas. You want to find the best persons in the industry. So that's in effect what you're doing. You're using other person's brain to gain wealth. And we're saying the same thing to you. We are the experts. We're in this aspect of the market on a day-to-day basis. So use our brain to gain wealth. All right. So factors to consider when thinking about investing. I don't think my slide is changing. Okay, here we are. Let me see if this resume slideshow. This I'm not seeing.
Nadine.
Yeah. Yeah, go ahead.
Hi, this is Paula. Miss Carly, in the chat, she wanted to know about the solution for business investments for business. So if you could speak to, on that for her, please.
Okay, so we are gonna be getting to some of those solutions in a short while. That's okay?
Definitely.
All right. Thank you. All right, so how do we know what investment is right for me? Because this is another very important question, right? How do I know what investment is right for me? So yes, we know that we're resilient. We know that we have that extra cash flow as a company or as individuals. What investment is right?
You have different types of things to do at different stages of your age.
Right. Perfect. Perfect answer. So depending on where you are in your financial life cycle, the solutions will be different. And in addition to that, the level of risk that you are willing to take will be different. So we know that for the stage one, the basic wealth protection, persons at that stage, 20 to 40 years, are perhaps able to take a greater level of risk than someone at stage 3, the wealth distribution stage, as well as someone at the wealth accumulation stage. So the level of risk is different, and the solutions will be different depending on where you are along the financial life cycle. And it is the same for businesses, depending on where you are in terms of your life cycle, the solutions will be different. So do you know which stage you are at in your financial life cycle? And not because you're at a particular age, it doesn't mean that you're necessarily there. You know, there are different factors too. Because if you don't have your pension in place, if you don't have your emergency funds in place, if you don't have your insurance in place, those basic things, then it may impact where you are. It means that you probably perhaps have to put those things in place before you look at investing. Remember, we said that investing is more long-term, right? Because if you don't have those fundamental things in place and an emergency comes up, you're gonna be disrupting whatever investments you have in place, right? So we want to get those out of the way, get those in place before we transition to the more longer term type of investing. All right. So now we look at the benefits of investing. Remember, we say investing is more long-term, and Tanis would have shared earlier that some of those long-term solutions are provided by Jmmb in terms of our funds, and we're going to look at some of those shortly. But benefits of investing, market volatility. And we talk about market volatility, we talk about the ups and downs in the market. This period is a particular example. The stock market, as we know, it would have declined by over 30% at the start of the pandemic, right? Now we have seen some growth. I think we're perhaps at about 12 or so percent. But that is an example of the volatility. And as we know it, before even the pandemic, the market, the Jamaican Stock Exchange was booming. Yeah, we were voted the top stock exchange in the world on 3 consecutive years. Our flag was featured on the New York Stock Exchange based on Wall Street, based on our performance here locally. But then COVID came and all of that was wiped out, yeah, in an instant. So that's an example of volatility. We have the ups and we may have the significant downs, and then it may go back up again. Now, the benefits of investing, because we're taking a long-term approach, we find that it smooths out some of the market bumps, right? So instead of just buying a stock and for the short term and then having to realize that gain or loss rather over the short term, you have a longer term period in order to recover from all of those volatility that you're experiencing. And we said earlier, investing in financial solutions is similar to investing in your business. You're taking a long-term approach, correct? It gives your money, I think this is blocking me, it gives your money more time to grow. It allows for greater levels of compounding because you're earning interest on your interest as you grow. It provides a steady income stream. And when we look at bonds, we'll see that bonds, for instance, provides that solution. It reduces trading fees, hence making the most of your returns. We spoke about this, reducing your fees, and it removes emotions. Now, this is a very touchy one. It removes emotion. I mean, just imagine you invest $1 million on a particular stock yesterday, and within a week, the market changed and the stock, the value of your total investment is now worth $400,000. Yeah? If it is that you're investing from a speculative perspective, you're investing over the short term, you may have sleepless nights. But if you're looking at the long term, then it won't impact your mental state that much because you would have done your research, you know the type of business that you're getting into, you know that markets will recover over the long term, correct? Warren Buffett, I believe, said, do not invest for 10 minutes in something that you do not intend to hold for 10 years. So it's important that you take a long-term approach to investing. And of course, we spoke about this too, it reduces taxes. All right, so what are some of these solutions that we're talking about? And I want to just make the caveat now that at Jmmb, we do Bespoke Portfolio. We create a portfolio that is suited for you based on your objectives, based on your risk appetite, and not just mass producing portfolios. So we take what we call the portfolio approach, and we look specifically at your investments. So just to position your mindset that I'm not gonna be telling you that this investment is for you and that investment is for you. It requires a conversation with a financial advisor to do a full assessment of your objectives, of your risk tolerance, of suitable products. And from there, we will put together the right portfolio just for you. So what are some of these solutions that we're looking at? Now, is there a question?
Yeah, well, you're getting into it, but Ms. Ferguson who actually wanted to know if now is a good time to purchase stocks. That I don't know if you want to add.
I didn't hear the question.
She wanted to know if now is a good time to purchase stocks.
If now is a good time to purchase stock. All right, so we did say it earlier, we're looking at the long-term approach towards investing. Notice, now is a good time to acquire some stocks, but again, it requires that detailed analysis. I mean, Jmmb publishes analysis on different companies on our website through our market column and through detailed research. What is important is that you do a thorough research in terms of the stocks that you're willing to buy. And this is where the financial advisor will come in to make a good selection for you, because you want to buy stocks at certain value. Yeah. So you want to do that detailed analysis to ensure that the stocks that you're buying are the stocks that are right for you based on your objectives. Because going through this pandemic, we know that there are some companies, and this is the reality, different companies are impacted differently. And there are those companies that we know for certain based on their fundamentals, we know that they will last. They're resilient enough to last throughout the pandemic and beyond. But there are those other companies who may be significantly impacted and may take a much, much longer time to recover or may not recover at all. So yes, no, and there is always a good time to buy stocks, but you want to have that detailed conversation to be able to identify the stocks that are right for you. No, I'm just gonna jump into it since we're on the topic. As business operators, we know you really don't have that time to be researching market and trying to crunch numbers and researching PEs and those things to see what stocks are value stocks or what stocks are growth stocks. And so that is where your financial advisor comes in being able to suggest portfolio investment or funds in respect of stocks, or unit trust solutions would provide a good avenue for companies like yourself who do not want to get into the ins and outs of buying and selling stocks. The unit trust fund, and let me see if I can just go to it right here. Unit trust provides that avenue for persons like yourself who don't have the time to be researching stocks. They provide that avenue for you to still get exposure to the stock market, still benefiting from the gains to be made on the stock market without getting your foot into the whole gamut of managing a portfolio. And what the unit trust is a form of collective investment scheme It's a unit trust of pooled investors, where the portfolio managers pools funds together and they manage those funds. I mean, the portfolio managers, they are the experts. They know what's happening with the companies. They are doing this on a day-to-day basis. It's a similar situation. You'd go to your doctor if you need financial advice, right? And so the financial advisors, they are there, the portfolio managers, they are there doing the ins and outs, knowing when to buy, knowing when to sell, knowing when to take gains. And it still allows you to benefit from the upside that is happening in the market without getting your feet wet, without getting involved in the day-to-day operations. So from a stock perspective, the unit trust would be a good solution for businesses. Let me just put this over so I can look at it. Are you seeing the screen now? Jmmb unit trust funds. So the income and growth would be a good solution for businesses who want to get exposure to stocks, but don't necessarily want to own the stocks outrightly, where they have to do the ins and outs. The 12-month return, as we can see on the income and growth, 13.12%. Year to date, the returns, year to date, we're talking about January to now, the returns have been about 5.33%. In addition to that, I think I'm jumping ahead on my slides. What taking the portfolio approach or investing in a unit trust allows us to diversify. Remember, we spoke about diversifying. So it gives you exposure to some stocks that we probably could not afford to buy from an individual perspective, because we're benefiting from this pooled position where the portfolio manager is able to take our funds and buy high valued stocks that can generate that added return for us. All right, so that's a good avenue if it is that as a business you're looking to get that exposure at a more managed level of risk. Does that answer the question? Good.
Yes, she said, she indicated that it did.
Okay. All right. So we talk about stocks and some of the other asset classes. We have cash, we have bonds, we have fixed income. Bonds would be classified as a fixed income instrument, and we have real estate. Now, there are other categories of investment, which, you know, most of us in the local market don't really get that exposure to as it relates to commodities, etc. So we're not going to get into that tonight, but the primary asset classes are cash, we have fixed income, we have stocks, and we have real estate. Now, some of the different types of solutions as it relates to cash. When we talk about cash, we're talking about instruments that are easily converted to cash, instruments that are liquid. And some of these are sometimes good solutions for businesses. When you talk about having that extra cash flow, which you perhaps want to maximize some return on whilst not tying it up for any long time. So a certificate of deposit is a good solution for the, and we're talking about the 30, 60, 90-day type of solutions. You know, within 90 days, you may have a deliverable, you may have to pay over some funds, but within this period, you want to maximize, gain some returns on it before you have to, you know, pay out those funds. Repurchase agreement, somewhat similar to a fixed deposit, but what happens with a repurchase agreement, it is generally backed by a security. I must point out also that for certificate of deposits, these are insured by the JDIC. We also have Treasury Bills. Treasury Bills are also short-term investments, and these determine, primarily is a fundamental for the determination of interest rates in the market. So oftentimes every month, thereabouts, we'll hear the government of Jamaica, the Bank of Jamaica, indicating that there will be a Treasury bill tender. I just want it to be known that you can participate in Treasury bills. Because, you know, oftentimes we think that these instruments are far-fetched. No, they are not. You can invest in Treasury bills. You can invest in Government of Jamaica bonds. You can invest in Government of Jamaica CDs. And the CDs that are issued by the Government of Jamaica, the Bank of Jamaica rather, those are normally short-term, 30 days.
I'm not sure if you are going to mention it further down, but let's say that I'm interested in investing in any of these instruments. What would I be looking at in terms of a starting amount?
All right, so for Government of Jamaica issued products like the Treasury bill, and we're talking about the BOJ CDs, these are usually at a minimum of $1,000 Jamaican, and you invest in the same increments. The CDs, however, the Treasury bills, I must add, it's generally through a bidding process where you bid at a particular rate. Over the last, I think the last Treasury bill rates came out at about 2.07%. That's on the 180 days. 90 days was a little bit lower at 1.94%. But as I said earlier, these instruments are generally safe instruments, and they are generally used as a determining factor of where interest rates move to or trend to in the market. The BOJ CDs, we find oftentimes that BOJ may issue new CDs, or they may what we call a retap, or issue an additional block of an existing bond, for instance. Investors, entrepreneurs, individual investors can also participate in these instruments. And this information is normally provided to you by your investment advisor, or you can see it in the general public. We oftentimes publish same on our Market Color, which is our weekly publication of what is happening in the financial market. So there is easy access to the information.
Okay. What about the unit trust? I know that the value changes on a daily basis, but apart from diversifying, based on my experience, they're normally relatively easy in terms of cash value to get into. Would you be able to give just a rough estimate of where the prices are now in terms of the starting amount?
All right, so I'm gonna feed the slide which captures our unit trust products, unit trust funds. The minimum amount is not there now, but generally for most of the funds that we offer, the minimum starting amount is 500 units. So you can calculate that. Somebody can quickly calculate it for me. 500 units of the income fund at a price of $21.13 would give you an indication of the minimum amount required to start that particular fund. So it's quite easy to get into in respect of the minimum balance. We note that if it is that you were going to be investing directly in the stock market, for instance, there are some brokers whose minimum starting amount is $500,000. I mean, for Jmmb, as it relates to investing directly into the stock market, you start at a minimum of $10,000 in respect of opening the equity money market account. But from there, you can trade any volumes. I know for the stock market, there is no limit in respect of the minimum number of stocks you can purchase. You can purchase at minimum 1 unit of stock on the Jamaica Stock Exchange, and you have access to purchasing stocks if it is that you want to invest directly and in the stock market and not through our unit trust fund. You can place your orders easily through our Moneyline platform, which is, I'll toot my horns in saying this is one of the best and most efficient platforms available in the market now.
I totally agree with you, and it gives real time
Exactly.
information, so you can be tracking your stock while it's being filled. And for persons who didn't do the calculation for the income and growth, it's $6,560 to start that investment. So I don't think you can answer anything better than that. That's really, really affordable if you ask me, and it is managed for you.
It is managed, no work required. You just put your money, and remember, we're doing it for the long term. You just put your money there and leave it. Can check in from time to time to see what's happening, you know. And as I said, the information is available to you via our Moneyline platform, but you do not need to be doing the groundwork for anything. The portfolio manager is in place. They are the experts. They know what's happening in the market. Their responsibility is to manage the fund towards a targeted return, and they will be doing just that. We need to not do anything.
And Nadine, I just wanted to bring in the TT clients into the conversation. We actually have Roshan with us. Roshan is our manager of brokerage services here at Jmmb Investments in Trinidad. So I just wanted to allow him a couple of minutes just to touch on some of the things that you spoke about in terms of the minimum amount to start investing and that kind of thing. So Roshan?
Hi, good night to everyone. Thank you for having me. And just to reiterate all of the points made by Nadine earlier, you know, diversification is key. Understanding your risk tolerance is key, right? So there are a number of different products, as we said, available to our Jamaica clients and available to our TT clients as well. In Trinidad, the minimum to start a local equity brokerage account would be 2,500 TT dollars. And of course, we would have specific minimums for the repo product, as well as, you know, direct investments. If it is that you wanted to do international brokerage, we have arrangement with interactive brokers branded under Jmmb International Access as well, available to the TT clients.
Brilliant. Roshan, I just want to interject there. I'm happy you raised that point, because more and more we find that a lot of investors are asking, how do I get exposure to purchasing stocks on the US market? And I'm happy you raised that point, that through our partnership with you, clients can get that exposure as well.
Yeah. And I mean, even to your point earlier about if clients were looking at specific commodity type investments, and if they wanted access to that, they could do that on the international market through an ETF type structure. Of course, guided by our financial advisors. And again, if it is that you don't want to do it, as you say, for yourself, I mean, there's wealth management services available as well.
Brilliant, brilliant. And just to add, not because you're based in Trinidad, clients who are here in Jamaica locally can still get exposure. They can still set up their account. We can still facilitate the process in them getting exposure to those solutions. Correct?
Of course, that's the beauty of being an integrated financial services group. Yeah. I mean, our clients have access across all the jurisdictions. Once it is that your KYC is up to date, I mean, we have common integrated client service platform.
Awesome.
Thanks, Roshan.
Sure.
All right, Denise, we had another question.
Let me just double check. No, you can go ahead.
All right. So so you can just take another look at our unit trust products. We mentioned earlier that there are different asset classes. We talk about the cash, we talk about equities, we talk about bonds, fixed income bonds, we talk about real estate, and there are different unit trust products that comprise of different asset classes, different asset classes. So we spoke about the income and growth fund, which is represented at the top. That is primarily stock-based. So if you want to get the stock exposure, then that fund would be the appropriate fund. We also have the Optimum Capital Fund, which is a very interesting one because we know that real estate seems to be booming on the local market. And not only from that perspective, but we find that over time, real estate value tends to grow. The Optimum Capital Fund gives you that exposure to real estate. So I know for a lot of us, and I say us, we can't necessarily just take up millions of dollars to go buy a property to get that exposure, correct? Not all of us can do that. However, participating in the Optimum Capital Fund gives you that exposure to the growth in the real estate market. And primarily, we have a bias towards commercial investing, though we may have some residential investments in the portfolio. We have a bias towards commercial real estate because of the level of stability that it creates. And, you know, it doesn't have that much variables that we have to reprice and consider going forward. Primarily, we can look at even the local market in respect of how, you know, rental income may have been impacted by COVID. From a residential standpoint, there's not that much volatility as it relates to commercial residential investing. So we have a bias towards commercial. But yes, Optimum Capital will give you that exposure to real estate. Or gilt edge fund, we talk about cash being easily accessible, converted to funds being easily converted to cash. The gilt edge fund will provide you with that option. So you can be in and out on a daily basis, just like any savings account, and you're still benefiting from the upside in respect of the performance in short-term securities. If you notice, the 12-month return on the gilt edge fund is 4.39%. I know if, for instance, you were to just put your money on a savings account for a year, you would not be getting that return, correct? Yeah. All right. And we have the bond fund, as the name suggests. This is primarily bonds. And some of these other funds, we can give you more details on it when we have that one-on-one with you. But some of these other funds may be a mixture of different asset classes, which provides even greater levels of diversification. All right. So I said earlier that, you know, we kind of moving away from, and of course, if it is that you want as an investor to just purchase a bond outrightly, purchase a stock outrightly, then that's available to you and we'll provide you with that sort of guidance. But more and more, we want to be more goal oriented. Right? You have a goal. There are different ways to get to that goal, and we want to do it in a structured format. So we take what we call the portfolio approach, and this involves creating a portfolio that allocates funds across different asset classes. So you're getting a little bit of bonds, you're getting a little bit of cash, you're getting a little bit of equity to create that upside, but we're not structuring it in such a way that you're completely exposed to any one asset class. So we talk about diversification, and that's what a portfolio type of investing approach captures. Is there a question?
Just double check.
Oh, I thought I heard something.
I think we did have a question in the chat. Jason Ellis is asking, what is the starting amount to get into the unit trust? I think you would have mentioned.
Oh, I think we answered that.
Yeah.
Yeah.
And I'd also indicated to him that I'll have an agent contact him so that he can have the detailed conversation, which one is best and the amount of that one.
Great.
Yeah. So we said that we're taking the portfolio approach where we're being goal centric. So you have a goal. We're gonna, based on your investment horizon, based on your risk tolerance, we will find the solutions that are suited to take you there, whilst minimizing your exposure in doing so. So I want to add that we have a goal we have a solution for every goal that you have. And Jmmb offers what we call our wealth builder solutions. These are so structured to get you to your goal. So even if your goal is to create your emergency funds, we can structure a portfolio to get you to your emergency funds. If your goal is to ensure that your daughter, who is so brilliant, is able to go to an Ivy League college, wants to go to Harvard, you want to save towards that goal, we can structure a portfolio for that. If you're looking to buy the dream house in 10 years, we can structure a portfolio for that. Right, so any goal that you have, we are able to structure the right solutions for those goals. And I just want to take the opportunity to reiterate the point that it's not a one size that fits all, where every one of us are unique. Every one of us goal, it might sound similar to someone else's, but there are different factors that feeds into that goal. And so we want to understand you in particular. We want to understand your goals. We want to understand the variables that feed into your goals so that we can structure the right portfolio to get you there. All right, so what are some of the benefits? We said these earlier. Risk diversification and reduction, maximize returns. It provides income. Portfolio returns can supplement one's income, and it gives you an exposure to various asset classes, correct? And it allows you, and this is the most important one for entrepreneurs, it allows you time to focus on your other priorities. It allows you time to grow your business. It allows you time to make money so that you can create that extra level of cash flow and divert some of those funds to your financial goals. Another important point I want to raise as it relates to risk, and we see this happening so often, you know, sometimes investors tend to get so caught up in getting big returns, right? So caught up in wanting the highest return. But I want to we know it as entrepreneurs, but just to remind us that the higher the risk, the greater the potential return, yeah? So if you're getting a high return, it therefore means that there is a high level of risk associated with that particular investment. So we want investors to be cognizant of the risk-return trade-off. And so at Jmmb, we try to move away from just the return discussion to looking at, you know, the whole portfolio discussion, which will, as we said, create that level of diversification, reduce your level of risk because you're being exposed, your risk is being spread across different asset classes while you seek to maximize your return. When you invest in any one product, we've seen it with we've seen it with a lot of bonds. You invest all your solutions, all your funds in a one bond or a one stock. When that one bond or one stock doesn't perform according to how it was projected, or if there's a failure on the part of the issuer, then what happens with your funds? You lose everything. As opposed to having a portfolio approach, if for instance, something went wrong with that particular investment, then that portfolio is is somewhat diversified in that respect, and it is not highly impacted by that one failure in that in that particular investment. All right, so looking at the risk return trade-off is important. All right, Claire?
Yes, I think we're good for now.
Okay. All right, so what are your investment objectives? Okay, I'm seeing that question. Grow your business, diversify your risk, maximize returns, or supplement your income. Go ahead and answer that question. So which investment is right for me? Again, we said earlier that this requires a discussion with a portfolio advisor. Your SME expert will have the discussion with you and direct you to an appropriate portfolio advisor who is able to take you through the portfolio discussion. Yes, I'm looking at the results. Risk diversification, yes, we have 9%. 48% of persons want to grow their business, of course. Maximize returns, 13%. Supplement your income, 30%. All right, so yes, Denise, we have some work to do. All right, so we are winding down. I'm happy that everybody is still on and still looking refreshed. So this is the penultimate slide. Which investment is right for me? We want to be able to identify your investment goal. As we said, we want to determine your time horizon. We want to determine your risk tolerance. And remember, about 75% of persons indicated that they know what their risk tolerance is. Was thereabout, right? Or about 60. So we want to be able to identify those factors through the portfolio discussion, and then we look at the best solutions. And we said this earlier, the type of investments should match your risk tolerance. Look at the risk return trade-off. And the idea is to optimize. All right. So my slide is not moving. All right. So finally, do you want a financial planning conversation? And Natalia, can you put this question in the chat? Because we want all of our participants to engage in a financial planning discussion. I mean, it's not too late, and we can always identify different goals that you're in pursuit of, and how we can, at Jmmb, can partner with you from a business perspective, from an individual perspective, to get you to your goals. So as we said earlier, we want you to determine your goals. We want to help you to determine the timeline to your goal. We want to assess your risk tolerance, create the right portfolio mix for you, and of course, to manage your portfolio so you don't have to be concerned about whichever bond go up, whichever bond go down, whichever stock price increase or don't increase. You know that you are in good hands. And of course, we work together in this financial partnership at achieving your goal. Yeah, we want to say it is easy as Jmmb, and we're here to support you.
Thank you so much, Nadine. I am going to stress you with just one last question before we go. Well, not stress, because I know you are more than capable of handling the question. So earlier in the presentation, you spoke about cheaper financing. So could you just give us
we spoke about
cheaper financing as one of the objectives of a business. So let's say I have created my business portfolio. In my personal, are there any investments that I can actually use to get financing to put back into the business?
Okay, so Tanis, you're talking about leveraging your investments in order to generate additional capital. That is a beautiful question. And yes, pretty much all of the solutions that we indicated provide that opportunity for clients to leverage their investments, albeit at different percentages. As it relates to the unit trust funds, majority of the funds offer at maximum or at minimum rather a 50% leverage of the portfolio. What that means is that if, for instance, your portfolio value is $100,000, you can borrow up to $50,000 against the portfolio. We also offer similar facilities for stocks, primarily stocks that are traded on the main market. However, if it is that you have junior market stocks as a part of a portfolio, an overall portfolio, then those will be considered as well. Generally, for stocks, it is similar, up to about 50% of the value of your portfolio. And as it relates to some of the fixed income solutions, your CDs, your repurchase agreement, those are generally up to about 90% of the value. So we find a lot of clients, Tanis, engaging in those sort of solutions so that they do not disturb their existing investment and they're able to benefit or collateralize rather those solutions in order to get added funds to grow their business. So we have clients using their bonds, we have clients using their stocks, using their unit trust as solutions to gain added capital to put into the business.
So we can have our cake and eat it, right? They said I
we definitely can have our cake and eat it.
Okay, and one last question, and I don't think this is going to be a specific answer. Let's say that I had my portfolio before the pandemic, and as we know, the investment values have come down because of what's happening. What would your advice be to someone who is seeing a reduction in their portfolio value at this time?
All right, so we go back to portfolios and we go back to objectives and the real reason for why you invest. From a business, we say that there's not much difference between investing in your business and investing from a financial perspective. So you would have identified your objective. We believe that you would have selected assets jointly with your financial advisor based on certain fundamentals, which means and based on the strategy that we use, it means that you would have selected investments that have a particular value. Yeah. So yes, you see the peaks and the troughs in the market, the portfolio value has gone down. You are going to hold firm. We said, do not quit. That's what we said earlier. So though there may be volatility, you have your long-term outlook. Based on the value and the quality of the investment, the expectation is that those values will rebound. So you're not gonna sell your good $50 million house for $15 million just because there's a change in the market, because you know the value of what it is that you have. So our advice is to you, and this is one of the advice that we articulated at the start of the pandemic: stay invested. Stay invested, hold on to your investment, because though there may be changes in the value, you do not realize those values until you sell, you know. Value may go up and down, but you hold firm, you will continue to benefit. The cash flows, for instance, might be coming in still. You're still getting the dividend payments. You're still getting the coupon payments if it's a bond that you've invested in. And the expectation is that the value of the portfolios will rebound. So stay invested.
And this is why it would have been so important, as you spoke about earlier, to actually do your budget and ensure that money that you're putting in your investment is money that you can afford to leave so that you can stay with when the fluctuations come.
Awesome. Well said, Tanise. Well said. You could not have said it any better.
So we have about 10 minutes left. So any last minute questions for Nadine? You have the expert at your disposal. So if you have any last minute questions, please feel free to go ahead and open your mics and ask them. I think there is a okay, so it seems that you were very, very clear.
Okay. I hope I wasn't as clear as Maud.
No, I'm sure it is clear as water. You did an excellent presentation. Lots of knowledge, I'm sure, was imparted to our attendees tonight. But if you guys have any questions, anything that comes to mind after you leave tonight's session, please feel free to talk to us. Our email address is in our chat window. It would be at the top, so you may need to scroll up. If it is that you want to work with the SME Resource Center and you'd love to come in and get your needs assessment, please reach out to us as well. We have networking events such as these workshops. We have I would say a minimum of 2 per month. So if you're interested in finding out how to attend them, because while this one is an open one, we do have closed sessions. So if you want to ensure that you do not miss out on any of our workshops, please reach out to us and we will be more than happy to let you know how to become an SME Resource Center. So that is it for tonight. Enjoy your night, everyone. And
I'm sorry, I actually had posted a question. This is Carlene from Precision. I actually posted a question, I didn't see a response to. I was just making an inquiry on credit cards. I'm not sure if this is the forum, but I'd be interested to know if it's not available, how soon will it be? What can we expect?
Tanise, you want me to take that one?
Go ahead.
Yeah, so there are plans in train, active plans in train, as it relates to being able to offer credit card as one of our solutions to our clients. A timeline, I'm not able to give that timeline just yet, but we can do more detailed checks in terms of where we are with that. But I can share definitively that it is something that's in the pipeline.
Okay, great. I look forward to that. Definitely do look forward to that.
That is Carlene, right?
Yes, it is.
Okay. Okay, Carlene. We can get back to you as it relates to perhaps a timeline.
Nice. Thank you. Great presentation as well. Thanks.
Thank you. So enjoy your night. Let me just check one more time. Any last questions before we leave? Okay, well, everyone enjoy your night and we look forward to seeing you at our next event.
Thank you. Have a good night. Just to add, Tanise, we are having our webinar on cryptocurrency. So participants could just hop over to our YouTube page to participate in that presentation.
Yes, and just to give some additional information, that webinar is also every Tuesday night at 8:30.
Correct.
So you can put it in your calendars, you can attend our sessions, and then you can hop over to the next Jmmb event.
Yeah.
So excuse me, ladies, so that is happening right now?
Yes, it starts at 8:30.
Okay, thank you.
Right? Yeah. So you can access via our YouTube channel, right?
Thank you so much.
Facebook. All right. Have a good night.
You're welcome.
Bye.